Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu. We've got longtime fools Lou Whiteman and Toby Bordelon giving a 1 to 10 rating to a 5-bagger over the last 2 years. It's Meta, ticker symbol META, Facebook. We'll talk about its business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Toby's going with a 9 and Lou's going with an 8. Lou, tell us more.
So the core business is probably a 9, but, and let's focus on the core business because that's really what I'm looking at here with the high score. I'm not looking at Zuck's science experiments with VR or whatever, but this core business is amazing. The cliche that we are the product, it's true, but Meta's ability to get all of us to self-monetize on their behalf consistently and growing over time is just powerful and impressive. I know there's TikTok out there, there's other competitors out there, but it feels like social has matured. We don't have the latest new thing every 6 months. And the entrenched incumbent is just set up so well here to continue to do what it's doing. It's a really, really, really solid core business. Not a lot of complaints.
Yeah, I went 9 here. I think some would say look, it should be lower than that because, they got competition, right? But I ask, what competition? They're the top, as Lou noted. They're the top company in social media, and it's not even close. Despite all the hate, people keep flocking to their sites and their apps. Many companies out there have tried to challenge them. Twitter, Google, remember Google Circle? Come on. But no one's been able to build anything nearly as dominant as Meta has.
Just so we get their properties out there, we'll start with Instagram, Facebook, WhatsApp. So yeah, pretty huge things there. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Lou's giving a 7. Toby's giving an 8. We'll go with the higher score first.
Yeah, maybe last year this would have been a 7 for me, but Zuckerberg has continued to impress here. He's not afraid to take risks. He gives the company plenty of time to work through things before abandoning projects. This guy's a very long-term thinker. Maybe I wish Sheryl Sandberg was still there, but Meta seems to be doing just fine without her. It turns out, everyone, that Zuckerberg does actually know what he's doing with his business.
Yeah, Sandberg being gone, that's a shame, but there's a good core team here that still remains. And as I said before, this business has matured. Management is well positioned to sustain and defend. And I think that's where we are right now. I like Susan Lee, the chief financial officer. I like it when these big tech companies hire CFOs from Wall Street. It kind of helps the communication. It helps smooth things out. I think we saw that with Alphabet. We see that here. My one criticism is Zuckerberg is a daydream machine. Reality Labs is there. He showed good discipline in recent years by not going too gung-ho. I still don't completely trust his instinct here. I feel like he's still itching to go all in. That is a concern. Hopefully there's enough mature people in the room, but it's hard to be too critical on the face of the business. I worry about his adventurism at some point again.
For financials, a 10 is a fortress, a 1 is yikes. Both of you gave a 7. Toby, tell us more.
Yeah, great stuff when you look at the financials here. 20% year-over-year revenue growth, over $40 billion in the quarter, which is a great growth for a company this size. Very strong cash flow, nearly $25 billion in operating cash flow last quarter alone. That's amazing. This means they can keep making investments indefinitely without really worrying about where that money is going to come from, which is great because AI investments are not cheap. They have tons of cash. Debt is higher than I'd like, but it's fine for now. You want to watch that debt, though. The issue here is if these investments they're making in AI in the metaverse don't end up paying off, that's probably going to come back to haunt them a little bit. I think investors aren't going to tolerate CapEx at this level forever without seeing some results from it.
Yeah, I mean, I agree with almost everything Toby said. Just to add a few more numbers here, 81% gross margin in the most recent quarter. That's a pretty good gross margin, right? Total costs, though, were up 14% year over year. Now, like Toby said, presumably, I think they can, certainly they can afford it, and I think they can sort of cut back if some reason they need to, if the growth isn't sustained or if the income is going to, but they got $70 billion in cash. If I had to poke a hole, I do think the sustainability of growth is a question long term, especially just the law of large numbers coming in. But even in a slowing growth environment, there's a ton of money to be made here with these margins.
Let's talk about valuation, Lou. How well will Meta stock do over the next 5 years? How safe is it? 10 is a sure thing. 1 is a lottery ticket.
So I'm at 10 to 15%, and I kind of telegraphed why. The long-term supersonic growth, how long it can continue. There's only so many people in the world to monetize, and social network innovation has slowed, it seems to me. I'm factoring in continued growth, and I think next 3 to 5 years, what we're talking about here, I don't see that being a problem, but tempering expectations just a little bit because at some point this does need to slow. I'm not going to assume any real positive financial impact from all that extracurricular stuff until I actually see it happen. Safety, it's a 7. The core business at worst is going to exist and continue for a long time and be fine. And as much as Reality Labs amuses me, I don't believe Zuck will end up drowning the company in it, even if he does overextend some.
Yeah, I'm the same as Lou right here, 10 to 15% in terms of returns. I think it's going to be a solid market beater, but it's really too big of a company at this point to think it's going to substantially outperform from here, especially after the big rebound I think we've got in the last couple of years. 7 on safety. The valuation risk does create some concerns, right? If the market sours on big tech, the stock could suffer. Also, if you've got some antitrust and regulatory risk out there, that's a little bit of a concern. Not a huge one, but it could hold the business back a little bit, depending on what happens with that.
Topic time. Toby, you like anything better than Meta?
Hard to say, and it depends on what you say or what you're thinking about when you say what their space is. In social media, no, definitely not. Advertising, maybe Alphabet, and AI, probably Microsoft. But in terms of their core business and their place in the market, I think Meta is the clear number one.
So it's weird to say because social is probably the biggest area of fail at Alphabet, and so it's weird to take Alphabet as my topic here. But Toby hit the nail on the head. My focus has been their ability to monetize humans, and nobody does that better than Alphabet. So Alphabet is my choice.
Thank you to both Lou and to Toby. They've given Meta a solid overall score of 7.5 out of 10, short of that 8.0 that would force me to own shares. I wish I had this show 2 years ago. Maybe the panelists would have compelled me to buy then. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is an investment bank. Till then, Fool on.
Portugal. It is just plain paradise. The Hawaii of the Atlantic or whatever. Mike, I'm about to spam you with pictures, but I just sent you a first one. Tell me that's not Hawaii. Hawaii Islands is National Park. Yeah, first time you go. That's what we're here to discuss, right?